Easy Tigers, my name is Tom Burgoyne. This is FX Logic, a brand new YouTube channel set up to hopefully make you guys some money. So, what is it all about? Well, about 5 years ago, I started trading for a hobby, doing Forex, and I reckon I've lost about 40 to 50,000 pounds in listening to other people and mentorship and reading books. And don't get me wrong, all the self-learning that I've done has taught me the fundamentals of Forex trading, i.e. I know what all the indicators do. I know the different time levels and periods that we can look at. I studied Elliott Wave briefly to ascertain that you get your impulse waves that move in 5 waves and your retracements that moves in 3, moving averages and everything else. So I've been through it all, and I would recommend that you do kind of study what all the different indicators do and how they perform and so on and so forth. However, the object of me today is to show you my methodology of how I trade. So anyway, in losing this money and in being mentored and listening to other people, I decided to kind of let the world stop so I could get off and I could kind of figure out for myself, right, what do I need to be a successful trader? Right, first thing is the mentality. I've struggled with the mentality, and it's only over the last year that I've become more patient and I don't let greed take over and overtrade and then lose my account. So what I do is, I'm very patient. I don't always try and enter a trade very quickly. I wait until I have the confirmation that I need, which we'll be running through on this video. And I also make sure that, the trade is a long-term trade and I'm not trading on like the hourly or even the 4 hourly to try and make a quick couple of bucks in a day or two. That's not what I do. All right. So, I was thinking about the whole methodology, and I was thinking, right, so all of these indicators that are known to me are all what I call reactive indicators. Okay, the market moves, they react and tell you the market's moved. Great, fantastic. I know the market's moved because I've just seen it move. So, they're all rendered sort of semi-useless to me. So what I've been looking at is ways of trying to be proactive in seeing the market move. And I kind of think I've hit the nail on the head. I've been consistently profitable for a long while now. And now I'm going to show you guys and set up a channel that I'll be uploading videos to twice a week maybe, so we can update trades that we've already put on and look at new trades and see what's upcoming, and we can just kind of go through this journey together. So if you subscribe to this channel, then you will go through all of my trades with me, and hopefully we can put a 10 grand account into maybe a 50 grand account or a 100 grand account, and in whatever time frame we can. All right, so first thing I'm going to do is I've set up a demo account, because obviously I'm not going to expose my real account, and I'm going to put this up to 10 grand. Okay, so what we're on 9940, so let me just put it at an even 10. All right, so with 10 grand we can look at making some half decent money. All right, so let's just add the 60 quid we need to add, and bang, there you go, 10 grand balance. Right, so I use IG. This is the platform that's preferred to me, just purely because it's really user friendly. It never really goes down. They're very quick with any issues I have. Not that there is many, but so yeah, so it's all good. So let's go back to our dashboard. Let's open a platform for the demo spread betting, and then you'll get your work area come up. All right, so I've already created a watch list, and my watch list is here. So how you can set these up however you want, and I'll just have open positions here. So I've got no open positions. So let's look at this with a fresh pair of eyes. So I've got my watch list, Tom's watch list, and my watch list. All right. So let's go into Tom's watch list. So Tom's watch list, I'm going to go to a pair just for ease and speed and everything else that I know is already making a move to kind of turn. All right. So we're going to go straight to the bottom, the New Zealand Canadian dollar. All right. So what we've got is we go to the daily, And this is what we're going to be basing our, let me just get rid of everything that's on there from before. This is me doing my analysis before so that I can show you guys, right? So let's open this up a bit. So let's go to our daily, right? So this is our daily. I've got a 200 period moving average, just purely because when the market moves, it does respect this moving average. It uses it as a support, as you can see here, or if it's coming down, it's using it as a resistance, or if it's coming down, it'll use it as a support. And, so it does, until it breaks through, it does respect it to a certain extent. Okay, so let's run through my other indicators. So I've got my MACD here. I've titivated it a bit, should we say. So normally when you get a MACD, it comes like this, all right? So you get your moving average, which I've shifted down a bit. So you get your moving average, and it's normally over the top of your histogram. But I don't like moving averages. They're reactive, not proactive. So let's take these off. So I'm just left with my histogram. So my histogram now will tell me everything I need to know, right? So I'll go into how in a minute, but let me introduce the others. So now I have my momentum. My momentum, it shows me the strength of the market, and when the price is climbing higher or it's going lower and the momentum isn't as strong, you kind of get a feel for it's being proactive in telling me that the strength of the market is dying down and there could possibly be a reversal. All right. So, and then I've got my stochastic. Now, I've adjusted my stochastic to the following settings just to make it a bit more smoother and a bit more readable. All right. I'll go into when the stochastic comes into play, but it doesn't come into play on the daily or on the well, it can come into play, but I don't choose to use it personally. So we're looking at these two indicators here. So my momentum and my MACD, but only using the histogram. All right, so what we do is we go into the market and we go, right, I'm on the daily, and let's have a look. Right, so the market's came down, it's gone back up, it's come back down, blah, 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 blah. So what's it doing now? So now it's going back up. So where's it going to go? Is it going to carry on climbing? Is it going to break this resistance here? Or is it going to come back down and break this support and then carry on going down? This is a trend line. They usually work quite well, so you can choose to use them or not. But for this purpose, I'm going to look at how the market price is with my MACD and with my momentum. So when I'm going into it, I'm going, right, so I've got a peak there. Then it's come back down, and then it's made a higher peak there. I go, right, okay, so does my histogram and my momentum support the fact that it's still climbing in an upward direction? So then I go, right, so let me look at my MACD. So I go, right, there we go. So I've got the peak there, and it's at a high there, yeah, okay. So then what I would be looking for in having a peak there is a peak up here somewhere, because that's a higher high, so this peak should be a higher high, and that supports the upward movement of this price. However, it doesn't. What it actually shows is what we call divergence. It's diverging away from where the price is going, all right? So we've got a high peak there, which then is that peak there. We go, right, okay, so now it's looking like it's tailing off. So we get a smaller peak there, but the price carries on going up. So what we know is actually the price is going up, but it's tailing off. The actual pressure is tailing off. I'll call it pressure because for those of you that are new to this, it's probably easier to understand. Like I said, I explain things logically. All right, so then we've got the momentum here. So momentum, again, is pressure. The pressure of pushing it up or the pressure of pulling it down. All right, so we've got the peak there. We go, right, great. So we've got good pressure. It's pushed it up, great. So then it's come back down, and the price has gone up again. But has the pressure pushed it up, or is it just trying to see if there's any value left there? When we look, the momentum is lower than what it was at the previous peak. So in fact, what we've got is we've got divergence on the histogram, we've got divergence on the momentum, but the price has carried on climbing. So that would tell me now that these are being proactive in telling me that the market is going to change direction. But we don't want to just put a trade on. We don't want to just go, right, let's put a trade on because we know it's going to go down. We don't know for certain it's going to go down. We've just got a high probability it's going to go down because these have given us that high probability. So now we're going to go to the 4 hourly and we're going to zoom in a bit and we'll just see what this little cluster of candlesticks is doing there. It's called a consolidation. So we want to zoom in and see what that consolidation is doing. So we're going to zoom into the 4 hourly and take a look. So let's open it up a bit so we can see what we're doing. And that is the consolidation that we was looking at, that I said that I wanted to see what it was doing. So let's have a look. So we've got the top point there. So we've got the point there, great. And then we can see that it's made a higher high here. So the price is pushed up and broke this price range. But on the histogram again, we can see it's diverging. So the histogram is tailing off. It's showing us that the market pressure is tailing off. We can also see it here on the momentum, that the pressure is high there and it's not so high there, but the price has gone slightly higher. We can see we've got an upward line and these would create a downward line. So that means we've got divergence, all right? So good, all right, we're on the 4 hourly and we can see that actually we're getting closer to the market turning because now we're on the 4 hourly, we can see that it's the pressure's tailing off on the 4 hourly. So let's go and see if the pressure is tailing off on the hourly, shall we? So we can zoom in a little bit more just so we can pinpoint our entry and we can see what's happening. So what we can see is, let me drag this down here. So we've got a peak here, which we've got our peak here, yeah, and that's level with that peak, which that would probably be about right because that's level with that peak. So nothing untoward there. So let's look at the bottom peaks. So we've got this bottom peak here, which gives us this little red peak here. And then we've got, it goes up. So from here to this peak, it goes up. Okay, so great. All right, we would expect that the momentum to be around where the line is, but it's not. It's actually got a lot of pressure pushing it down. So although the price is higher, we've got more pressure pushing it down, which would tell me that we're about to go on a downward turn. Now, the interesting thing is, this is how on the hourly, this is how it all works. So on the histogram, we've got the line going up. The pressure's tailing off. On here, the pressure's tailing off. But on here, the price goes up, it comes down, but the histogram isn't as strong and the momentum isn't as strong, which has caused now it to go up. So there you can see a classic example on a micro scale, albeit, but it's a classic example of how divergence and convergence happens. So this is convergence because this is converging on the price. They're converging against each other, yeah, like an arrow. So that's good. So we've got that, which would be proactive and tell us the market is going up because the lines are going up. Now this has come down, so we think, right, this is a lower low, but this is higher than the previous. So we know now that the market is going to go up. And it has done. It has gone up on the hourly temporarily before the big move down. All right. So now we're in a situation we go, right, okay, so it's gone up. How do we know when it's going to come down? Truth of the matter is, we don't. You know, anyone will never ever get the turning point exactly right. So what you do is you put stops in place. So you say, well, I don't know if I'm right, but I'm going to put my stop somewhere. So if I'm wrong, at least I know I'm not going to get stopped out. So what we're going to do is we're going to put a trade on. I know we're probably thereabouts ready to go because this is where my stochastic comes in. So now I look at my stochastic, and when it goes over the line, it means it's overbought. So now it's going to start selling off. All right. So we're at that point. We're there. So actually, we're probably prime to put on our trade. So to recap, we've been on the daily, right? We've seen divergence, right? This is going up, this is coming down, this is coming down, right? We then go, sorry about that, we then go on the 4 hourly, and again, we can see the same thing, right? If we open up the 4 hourly, we can see quite clearly that it's coming down. We've got a peak there, peak there, peak there, a higher peak there, but the peak isn't higher there. So that's coming down and that's showing up. So that's being proactive in telling us, yes, we're going to go down. So let's go to the 1 hourly. And we're now here. And on the 1 hourly, it's telling us the same because we've got a lower low. So we've got a higher low there, but a lower low there, and a lower low there. And that's telling me it's going to come down. Now my stochastic is oversold, and we're probably right at about the right price. So when you see the divergence, which is what we've got, so this is pulling down, this is pulling down, and this is going up, then we wait for the stochastic to go oversold to enter the trade. So I'm going to enter the trade, right? This takes us into our money management section. So people say, right, never bet more than 1% of your account and this and that and the other. It's all rubbish, right? Only put on any one trade, right, the amount of money you can afford to lose, right? So I've got 10 grand in my account. I reckon I can afford to lose 250 quid of that. Okay, so very quickly what we'll do is we'll calculate how much we're going to put on. So we draw a horizontal line there, or well, actually where the price is, and we'll put another horizontal line where we're going to put our stop, which is above the highest high. Right, so let's say there, and we're going to then get our calculators out, and we're going to do a quick calculation of how many pips we've got in that gap. So we go 91.25.4 minus 9091 on the dot equals 34.4 pips, right? So we know we've got 34.4 pips. We know we only want to lose £250. So let's see how much pounds per pip we have to put on this trade. So let's go £250 divide by 34.4, I think I said it was. Sorry, I forgot already. So 34.4 pips. So 250 divided by 34.4 pips equals 7.26 pips. Okay, so we're looking at putting £7.26 per pip, which will allow us to only lose £250. So let's quickly do a sell. So let's go sell. So I'm going to round it down to 7 rather than 7.26. So let's go 7 pips to sell, place deal. So deal's confirmed, trade is on, and then we're going to put our stop in place. So our stop we're going to drag up and we're going to put it just on that line. Now bear in mind when you're placing your stops, don't put it right on the line, always cater for the spread. Now the spread here is 3.5 pips. However, over the weekend, it'll probably go to about 9 pips or something because that's what they do. So what I'm going to do is I'm actually going to put my stop a little bit away. All right. So we're actually going to lose £268 rather than the 250, but thereabouts. All right. So now the trade is on. The stop is in place. I've showed you how to calculate your stop to control your loss, which is how you need to manage your money. All right. Now, one thing to remember, don't panic, just let the trade play out, all right? Don't try and get out of your trade before it hits the stop. Just, if it's going to hit the stop, it hits the stop. You know what you're losing, and that's it. So don't panic, let the trade play out. Now, what we're going to do is we're going to go back to the daily, and so what's going to happen is, the way we're going to manage this trade is, when this trade starts going down, right, on the 4 hourly, it will make little retraces, right? So let's take, for example, this here. So let's say this is what we're looking at and we're going up. So we put on a trade at the bottom and it starts going up, right? It goes up, comes down, makes a retrace. Then it goes up again, right? and carries on going up. So what we do is we move our stop to this point here, where this little retrace was, right? So then it goes up and it comes down, it makes another little retrace. So then we put our stop to there. Then it goes up again and goes up, makes another little retrace. So then we just move our stop up slightly, right? Now we just check this on a daily, then it fires up and it comes back down to here. So then we just budge our stop up to about there. And then it fires up again and it comes down and it comes down and retraces to there. So then we put our stop there. So already we've locked in all this profit, right? So we keep our stop there, right? So then it comes up and it comes up and it comes up and it comes down and it goes there. And it retraces down to there. So then we put our stop there, thinking it's going to keep going up. But it doesn't. So what it does, it goes up a little bit and then it comes down and we get stopped out. But we get stopped out and then it comes down, it comes down, it comes down. But we've got stopped out at a good point, right? So we've got this whole trade under our belt just through managing, moving our stop up to the retraces, right? And that's how we're going to manage this trade. So when this trade happens, it's going to go down, 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 down. And every time it makes a little retrace up, we'll just move the stop down to where that retrace is, the high of that retrace. Then it goes down, 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 little retrace up, and then we move the stop to where that retrace is. So if it does reverse, we get stopped out and we've locked in a good amount of profit. So what we're going to do is we'll keep an eye on this trade now. It'll probably go on for a little bit of time. On Sunday, I'll look through all the pairs and I'll upload another video on Sunday so we can see what pairs are ripe for the trade and everything else. And we can go through the entry points on them, whether they're ready for entry or not, and how we keep an eye on them. And then we can also look at this trade and see if it's gapped up or gapped down, or So we'll go through all this. But the good thing is, subscribe to my channel. We will go through this together, and let's see if we can make this 10 grand into 100 grand eventually, or even more. And we'll have fun doing it. And if you've got your own accounts and you wanna take my viewing pleasurable video on board, then maybe you'll make some money, or maybe we won't. I don't know. Who knows? But just a bit of fun, and let's build up a community and let's go through this together, and let's see how fast we can get this up and running. Well, thanks very much. I appreciate you watching the video, and I hope to see you subscribe, and I'll release another video on Sunday. Right, YouTubers, enjoy yourself, have a good weekend, and don't do anything I wouldn't do.